Our last Doge call is up 1.4%. Overnight scans done. And Ethereum USD is the chart that stood out. Verdict: long. The exact entry, target, and stop land at the end. First, the evidence. 3 layers of evidence, then the trade. Retail view first, patterns and indicators. Then the institutional read. Then the trade itself at the end. Let's go. Chart first. This is the daily last 60 candles. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $20.45. Red is our SL at $18.03. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 3 chart patterns on the daily: double top, double bottom, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. 1 second. If charts like this are your thing, subscribe now so tomorrow's scan lands automatically. Pattern number 1. This is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks, 2013 down and 3018. Measured move target 2029. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is below 5.2%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. 1508 Eastern's 50 yuan. Measured move target 2045 $16. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 6.1%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 3, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plus on 10.5%, then tight consolidation, bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 110.5%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Candle signal number 1. A 3 white soldiers just formed on the last 3 candles. See the dashed box on the chart? That's where it printed. It's a bullish read with 3 out of 3 strength. 3 consecutive higher bullish closes. Strong, sustained buying pressure. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Here's the level map, and where our entry, target, and stop sit inside it. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SS inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of +0.25, technical +0.09, machine learning model +1.11. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 23, and that tells us we're in a moderate trend regime. Important because some strategies only work when ADX is above 25. On balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now we switch lenses. Retail view done. If the institutions aren't on the same side, none of it matters. Smart money concepts. Let's check. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bullish zone between 1749.35 and 1842.46. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $1,877.03 and $1,900.07. Price tends to revisit these imbalances. Most importantly, we just had a BOS bullish move at $1829.51. A key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at $2,326.06. The value area runs from $1,506.51 on the low side to $2,984.39 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bearish. Price, 1928.38, is below POC, 2326.06, but above VAL, 1506.51. Bearish lean, watch VAL as support. Order flow next. No level 2 here, so we read pressure from closes and volume, a solid proxy. Over the recent window, buying pressure accounts for 62% of volume versus 38% selling. The overall flow signal is bullish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 63, signal neutral. Williams %R is at 9, bearish, Chaikin. Money Flow reads P-20, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Quick context. Over the last 5 sessions, this pair moved +75% and over 20 sessions, +113.56%. That tells you whether momentum is fresh and extendable or stretched and due for a pullback. Step back with me. How's the broader tape? On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. The full plan is almost here. Before it lands, subscribe, and tomorrow's chart comes to you. 1 slide on risk. Skip it and no signal can save you. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. Time to pay it off. Here is the exact plan. Bias is long. We'd look to enter near $1,939. Take profit sits at $2,045. Stop loss at $1,803. That puts us at 0.78 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 0.78. Horizon is roughly 5D, that's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan, never risk what you can't afford to lose. Tomorrow morning, the scan runs again. Subscribe and turn on the bell so you see it first. So zoom out for a second. What we just walked through on ETH-USD, that's a long bias setup projecting roughly 5.5% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Drop a comment with the ticker you want next. I read everyone. Trade safe. See you tomorrow. And remember, we post every result publicly. Our last Doge call is up 1.4%. The next scan is already scheduled. Tomorrow morning, whole market, one winner, full breakdown. Stock or crypto, whatever ranks highest. Subscribe and hit the bell so it lands in your feed. See you then.